Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, March 13th. Hope you guys are having a wonderful morning so far today. We got a few economic news to go over today, so we'll delve right into it. We'll start out with the NFIB Small Business Index for the month of February. So this is kind of the gauge for small businesses and their optimism. So in January, at a 106.9 rating, and in February, it up to 107.6. This is the best number we've had in about 34 years for this type of number, the NFIB small business. So great numbers here. For the first time, they said since 2006 that it's not taxes is their number one concern. Typically, the top two concerns have been over the last several years been taxes and regulations. Now it's actually finding qualified candidates, employment. So these guys are putting money back into the companies, and a lot of it is going in towards hiring into the higher wages, to retain people and bring people in to the product overlays. I mean production and stuff. So good overall numbers here for NFIB small business. And last but not least, we got the two consumer price index numbers, inflation numbers on a consumer level, which is important data to go over today. Also known as CPI. So the headline number. We had a 0.5% growth in January, which is obviously a pretty scary number. Forecast for it was at 0.2%, and it came in at forecast. So as you can see, both came in at forecast. The core is when you strip out the food and energy. So we had a 0.3% initially in January, and when stripped out, we had 0.2%. So both came in at 0.2%. So year over year, the headline number here went from 2.1 to 2.2%. But however, the core remained the same at 1.8% year over year. This kind of usually, it's not the Fed's favorite gauge. They do look at this one, but it's not their favorite gauge. Their favorite gauge is the PCE, or the personal consumption expenditure. But the core is something they definitely look at, and the target rate usually kind of trends a little higher than that of the PCE number here. Now, let's go ahead and take a look here at the market news here. And right now, the stock market is up. The Dow is up just over 100 so far this morning. Now, some bit of news that came out this morning is Secretary of State Rex Tillerson resigned, and he's being replaced with CIA Director Mike Pompeo for that part. And right now, it looks like the market's just kind of shrugging it off. Typically, something like this might kind of rile it up a little bit, but I think they're just kind of comfortable where things are at, and they're just kind of moving along right here. Now, later today, we do got a 30-year bond auction. Yesterday, we had a 10-year Treasury auction, which came in okay. It was just wasn't great, it wasn't cold, it was just kind of just okay number here. So, of course, the 30-year bond could potentially move markets a little bit, especially the MBS here, if it comes in really poor. Let's kind of move along here, see where bonds are doing here. So here's the MBS. We have the 25-day moving average. We have this floor of support. We've been kind of in this middle range here for a while. And today we're testing up against the 25-day moving average. So we start right now, we're up about 6 basis points. Not quite enough to give us better pricing yet this morning. But the nice thing is that we are pushing up against this 25-day moving average. The drawback is, as you can see here, when we've done that, we've got pushed way down. So hopefully we don't get pushed way down. You go back to January where we kind of test it and it kind of pushes us way down here even further. So again, this is a possibility. So just keep an eye on this, as a 25-day moving average has been a pretty tight cap from us being able to expand or get out of this trend as of yet. So just be very cautious here. If we do get above it, if that will be if we're finally hitting our final stages here, or if we're going to break above it and change the trend, because again, we've been in this sideways pattern here for almost a month here. If you see this kind of range here, in this range here, at some point we're either going to start going further down or start going upwards, and you'll kind of see it a little better here with these yields. So as you can see the yields, we've been kind of in the sideways pattern, and have been testing this. Right now we're testing the 25-day moving average, which is giving us that floor, which has been a strong floor of support, keeping the yields up higher. But as you can see, it's also getting a lot closer towards this here, the ceiling. At some point, once it kind of reaches up here, it's going to squeeze us as into a direction as to either push us further up or push us further down. And which direction, the trend would kind of say it pushes upward. So this is why I'm saying be very cautious as to If you're out there, if you're floating interest rates, you're in a transaction, you're floating interest rates, just be a little cautious there that it could worsen uh, more than more. Most likely, it could worsen than it would improve here. So just be a little cautious here. All right, folks, that pretty much wraps everything up. If you guys want to get more data, just come over to Twitter. You can find me on my handle at Mike Bjork. I do post throughout the day here. But otherwise, I hope you guys have a wonderful day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.